You weren't supposed to see this. Alpha X was engineered for institutional execution, hedge fund desks, risk teams, quant strategists. It was designed to extract clarity in the moments where milliseconds matter. No recycled retail concepts, no indicator soup, no after-the-fact logic, just pure real-time market structure, liquidity shifts, and internal flow rendered exactly how professionals interpret risk, not react to it. For years, this stayed locked behind internal walls. But as the landscape evolved, so did we. A new generation of independent traders emerged, faster, sharper, more self-directed. So we made a decision. We opened a selective channel, quietly, no public launch, no hype, just results. And now, you're here. This is the full breakdown, how Alpha X works, why it was built, and how to master it like the professionals who use it every day. Watch closely, because at the end of this class, you'll understand why most retail traders lose, and exactly what you need to start winning. Alpha X trading system input settings. Let's walk through the system configuration so you understand exactly what you're looking at. Most retail indicators overload you with gimmicks, 50 settings, toggles, sliders, zones, even emojis. All noise, designed to confuse you. The more settings they give you, the less edge they actually have. Alpha X was engineered for execution. There are no mood rings or visual fluff. What you see is what's been battle-tested by institutional quants. So every setting here is intentional. Every parameter is clean. Let's break it down. First, you'll choose your mode. You can select historical or present. Historical mode shows previously confirmed structure, good for study, journaling, and review. Present mode is what we run in real time. It reacts to the current market environment with precision logic that adapts as new candles print. This is the mode used when trading live. Style gives you two options, colored and monochrome. Colored provides visual hierarchy between different order blocks and system elements. Monochrome flattens the visuals, designed for traders who don't want emotion tied to color. Psychology mode. This toggle is the one most traders overlook. Psychology mode turns all candles black. No green, no red, no visual bias. You're forced to read structure, articulation, and volume expression without emotional anchors. It's how we train decision-making at the desk. Remove color, remove noise, trade reality. Order blocks. This section is the heartbeat of Alpha X. You have access to two order block categories, swing order blocks and internal order blocks. Each can be set to a max of 2 depth levels. Why only 2? Because overmapping dilutes edge. We don't care about every block. We care about the ones that matter. Swing order blocks. These track macro-level breaks in market structure, perfect for identifying institutional footprints around major liquidity runs. They help you spot the zones where algorithms shifted sentiment and swept clean. Internal order blocks. This layer handles the micro. Internal order blocks identify internal displacements, the setups inside the setup. These are often invisible to the naked eye unless you've trained for thousands of hours. Alpha X surfaces them in real time. Order block filter. The order block filter determines how the system qualifies valid blocks. You can choose between 2 filtering mechanisms, a TR-based filtering, which adapts to volatility conditions, great for fast-moving assets. Cumulative filtering, which bases validity on sustained displacement over time. You can only choose one. They aren't stacked. Think of this as choosing which algorithm governs, which blocks get displayed, dynamic aggression or accumulated intent. Order block mitigation. This decides how the system reads mitigation logic. High-low mitigation means the system waits for a sweep or tag of the high-low of the block before removing it from the chart. This keeps your charts clean without sacrificing accuracy. Once the block has done its job, it disappears. Inputs and status line. Last, we have the inputs and status line checkbox. When checked, this will show your live settings in the chart status line, so you can quickly verify configuration without opening the settings window. It's subtle but crucial for execution during high-speed sessions. That's it. No extra tabs, no clutter, no confusion. Alpha X isn't built for traders who want options. It's built for traders who want results. Let's shift gears to Liquidity Pro, the second engine inside the Alpha X ecosystem. Most traders think in candles. We think in volume. Liquidity Pro maps out the invisible terrain, the deep water where institutions operate. Not price, not structure, but raw, weighted volume flow. If you don't understand where liquidity is sitting, you're not trading, you're guessing. Let's break it down. Number of bars. This is the scope of the volume profile. Set to 125 by default, it tells the system how far back to sample volume distribution. The deeper the bar count, the broader the structure. Use 50 to 75 for micro rotations, 125 plus for macro structure. Adjust this based on the context you're trading, compression versus expansion. Row size. Row size controls vertical precision. Set it lower for high-resolution profiles where you need pinpoint volume shelf reads. Raise it for smoother distributions on higher timeframes. 100 is a balance. Aggressive enough to catch traps, stable enough to stay clean. Value area volume percent. This tells the system how much of the total volume to include when defining the value area. The zone where most transactions occurred. At 100%, you're seeing every bar's impact, but lower this to 70% or 50% to isolate the core, where institutions accumulated, not retail noise. Show POC label. POC stands for point of control, the single price where the most volume was exchanged. Toggle this on to show a live label of that level. You'll be shocked how often price retests POC zones to validate directional bias. Smart traders stalk POC to understand where retail is grouped up and avoid. Retail likes to use this as an entry. Inputs in status line. Same as before. This just keeps your config visible at the top of your chart so you never forget what parameters you're running. Liquidity Pro doesn't guess, it listens. Volume doesn't lie. Price can fake, trap, and trick, but liquidity reveals who's committed. You need both layers to trade like an insider. That's why Alpha X doesn't stop at candles. It reads the order flow beneath them. Global Session Awareness, Alpha X World Clock. Markets never sleep, but liquidity concentrates. The Alpha X World Clock was engineered to give traders immediate clarity on global session timing without cluttering the chart or guessing which session is active. Tokyo, London, New York. These aren't just time blocks. They're psychological shifts in global liquidity behavior. And with one glance, you'll know exactly where we are in the cycle. The World Clock interface uses UTC+0 as a universal anchor, then converts it to your local time. You'll see a visual dashboard showing which session is currently active, and more importantly, which are closed. We also include a proprietary middle range toggle. This highlights the median liquidity zone between global sessions, often where price consolidates before the next expansion. This isn't a gimmick, it's a time-based order flow compass. For scalpers, this lets you avoid low-volume traps. For intraday traders, it shows you when to expect volume surges and reversals. When institutional desks rotate capital, it's not random, it's session-driven. And now, you'll always be a step ahead. All right, let's unpack the Alpha X trading system. When you toggle Alpha X onto your chart, the first thing you'll notice are the bullish order blocks beginning to populate. By default, the system uses color-coded visuals, but I prefer the monochrome mode. It turns every order block a neutral gray. This removes color bias and helps focus purely on structure and execution. You'll see the order blocks vary in size, some narrow, others wider, based on live market dynamics. Now keep in mind, this system is designed to deliver only the information you need, nothing extra. We've limited the options deliberately. Less noise means faster, more confident decisions when it's time to execute. As price begins trending upward, red bearish order blocks may appear to highlight areas of resistance, but order blocks won't populate unless the system detects sufficient volume in data to confirm a valid setup. So if nothing appears, there's nothing to act on. No trade is better than a bad trade. When a bullish order block does print, that's your phase one, a pending buy opportunity. As price trends and volume shifts, these blocks may expand or contract in real time. You'll see this visually. It's the first sign of structure forming. Then comes part two. We need price to create a swing high, a target. That's where a bearish order block populates. Not for shorting, but to mark a potential exit. We don't short, not with this model. This is a long-only system by design. Fewer trades, tighter risk, minimal complexity. That simplicity increases accuracy and keeps your edge intact. So when the bearish order block appears, we use it as a reference, not a reversal. That's our take profit zone. Behind the scenes, Alpha X is recalculating, adapting in real time. It may adjust your bullish block slightly based on updated order flow, optimizing the risk-reward dynamically. It will lock into place once conditions stabilize. That's your entry zone. Anywhere between the start and end of that bullish order block. Think of it as a bracket. Price needs to return there before you engage. From there, we bring in Liquidity Pro. Now we dial in precision. Within that block, Liquidity Pro highlights the exact pockets of execution, the sniper zones. This is where you press the button. Think of it like a scope. You're not just watching price move in and out of your zone. You're waiting for that one perfect tick, that single moment where your entry aligns with real-time liquidity flow. That's the trigger. Let's break down what liquidity actually looks like and how most retail traders misinterpret it. What you're seeing here is a basic sketch of liquidity zones. These areas, right here, are where orders are being filled, where real demand steps in. It's also where most retail traders get annihilated, day after day. Blown accounts, failed prop firm challenges. This is the battlefield. And this breakdown might be the moment everything changes for you. Now I know many of you have used basic volume profile tools or seen point of control indicators on YouTube. Let's be clear, they lag. And worse, they mislead. The way you've been taught to interpret them is flawed. So let's reframe. These bars, think of them like a queue, a line forming. Wherever that largest bar sits, that's where the crowd is. Think Disney World. Elbows out, everyone jammed into the same line. That's your chaos zone. So when this section of the profile begins to build, when these bars cluster and climb, that's your signal that the herd has arrived. This is the part of the market where things start to unravel for 90% of traders. And if you've been in this game for more than a week, you've heard the stat, 90% fail. Some say 97%. Whatever number you choose, it's the majority. And here's why. They're entering inside the chaos. They're trading inside the crowd. But Alpha X is built to show you exactly where not to enter. While the rest of the market is queued up, waiting in the middle of the terminal, we're already seated in the lounge. The volume cluster, the thickest part of the distribution, isn't our signal to get in. It's our signal to stay out. Because institutions aren't taking positions inside this congestion. They're entering early, where the air is still crisp, quiet, controlled. This zone right here is where real positioning begins. This is the first-class lounge. That chaos, that's coach, that's standing room only. That's where retail dies. So we time our entries before the crowd. We position with precision, and we do it over and over again. Now let's talk exits. The bullish order block, our entry, sets the stage, but we still need the exit. You'll find that the exit aligns, almost poetically, with the upper edge of the volume structure. This is the departure gate, clean, quiet, premium. We finish where the institutions finish, well before retail even realizes what just happened. And when everything lines up, the Alpha X system, volume structure, and order flow, you'll see this setup appear again and again. This isn't a one-off. This is the system. Memorize this. Visualize it. Because once it clicks, you'll stop being the liquidity and start seeing it. Now that we've walked through the illustration, let's activate the system and execute in real time. I'm toggling on the Alpha X trading system alongside the Alpha X world clock. As you can see, we're currently presented with a bearish order block. This is a visual cue that previous longs are being unwound. It's a transition zone. We're not looking to short this, and as a firm, we don't short at all. Ever. We simply wait. We wait for the next bullish order block to form so we can prepare for an entry in alignment with our directional bias. Let's allow the chart to play forward. Now, watch what happens. That bearish order block vanishes, and we're now presented with a clean, bullish order block. This becomes our zone of interest. It's Friday, 1 a.m. That's the cue for me to bring in Liquidity Pro. Here's the key. This order block is large, but we're not interested in buying blindly anywhere within it. We want precision. We want to isolate the exact pocket where institutional entries are taking place. Now, this is the final low. That's our broad entry zone. But we've engineered internal structure recognition, allowing us to identify additional micro-order blocks within this macro zone. These are not meant to confuse or clutter the chart. They're structural annotations, potential scaling points, but they only become valid after the primary zone has been mitigated. Let me explain. Let's say price drops into the main order block and begins to rally. Then later, a minor order block forms. But it's not actionable until the larger zone has been fully mitigated. If that happens, the smaller structure activates and becomes a candidate for scaling in. But until then, it's background noise. This system keeps you focused. It helps you stay disciplined. You know exactly what matters and what doesn't. Now let's talk about settings. You've heard the statistic. 93% of traders fail. So the system allows us to choose how much of that failure we want to avoid. For example, we can isolate where 75% of all retail volume is clustering. We can visualize that pocket and do the exact opposite. Remember earlier when I said you want to be first in line? This is what that means. If 93% of traders are losing, our job is to find out where the remaining 7% are positioned and join them. And that starts inside the order block. Let's narrow that down. We're looking for wicks that terminate inside the bullish order block. One here, another here, and a third right here. These are our only 3 points of interest. Nothing else matters. This is how we filter. This is how we remove randomness. This is how we reduce noise and increase conviction. Now, adjusting the volume percentage is the only input you'll ever need to customize. It tailors the output to the asset you're trading. Let's say 92% of volume is within this broader area, but when I shift that to 93%, it aligns perfectly with the wick I'm watching. That becomes an A+ setup. This is how we grade trades. A equals wick inside the high-value pocket. B equals wick. Nearby C equals outside the value area, but still within the block. We're not guessing. We're classifying based on data. Once I've selected the wick, I can now define my execution plan. Target? Simple. The previous high. Same rules apply. Volume cluster, wick alignment, institutional logic. Just like before. Lounge to lounge. Entry is your departure gate. Exit is your arrival gate. Stay out of the chaos. Let retail scramble at the terminal. You're already checked in, sipping espresso in the lounge, watching it unfold. All right, I'm going to let this play forward in real time. Once we get through London and approach New York session, I'll begin slowing it down. Here we go. London session is now active. Let's pause. I want to center everything, bring in all available data, and get a clean visual before we continue. There. Now we let it run. Again, our objective is simple. Wait for New York Open and be laser focused on executing only when price approaches our predefined zone. So I'm adjusting the time 9 a.m., 9:30 market open, pulling back to 8:30 just to observe. We've got time, no rush. Now here's the zone I'm targeting, 23,330 area, right where that wick is. That's our A+ setup. And remember, this is where discipline matters most. We don't chase price. We don't jump in early. We wait until the market enters our zone, and then we execute with confidence. Notice how things begin to smooth out here. This region, the point of control, is where the chaos lives. It's the center of retail attention. Everyone's buzzing up there. It's loud, it's crowded, it's emotional. That's not where we operate. Look below. Down here, it's smooth, it's controlled. This is where institutions prepare. It's calm, consistent, and quiet. This is exactly what we want to see. Now take a look at how clean that structure is. Just 3 confirmed wicks, all aligned perfectly. Volume confirms it. Structure confirms it. System confirms it. It's textbook. And the key here is patience. Don't let fear make decisions for you. Don't abandon the session timing. Don't force trades outside of structure just because price is moving. Follow the system every single time. Because when you follow the framework, it becomes a repeatable process, regardless of what the market throws at you. Volatility can change. News can drop. Sentiment can shift. But the data never lies. Okay, we're entering New York now. London is beginning to wind down. Time is 7:30, 7:45. Now we sharpen our focus. We're getting close. Approaching 8 o'clock. $8:15. Everything is lining up. Look at the volume. Look at the zone. This is as clean as it gets. Approaching 8:45 now. These levels are perfect. Everything is where it needs to be. Let's prepare. There it is. Entry confirmed. Now, this specific setup didn't give me access to the A+ wick. I wasn't able to catch the full move down into the A zone. Instead, I executed on the B level setup. That's perfectly fine. I'll walk you through the entire breakdown in a moment, but what matters here is this: precision, confidence, no hesitation. From here, it's just a trade, and there it is. Full playthrough, flawless. Now let's break it down. Let me pause the chart. I'm going to clear out some visuals, but I'll keep Liquidity proactive for review. Here's what happened. Price tapped just beyond our B wick, didn't reach the A level, but came close enough, and with all context aligned, I pulled the trigger. Why? Now observe the volume. Smooth, calculated, organized. That's where you want to live. This isn't guesswork. This is how institutional traders operate. We reduce randomness. We trade from structure. We dominate from data. And that's how we extract from the market every single day. If you made it this far, you're not like the rest. Most traders skip, scroll, guess. You didn't. You sat through what firms have kept behind closed doors. You saw how we track structure, flow, and trap setups. Not after they happen, but before. Because real traders don't react to the market. They anticipate it. You want to see liquidity, not be the liquidity. And that's the difference. So if you're ready to stop gambling, stop guessing, and finally trade with the same tools we built to win, click the link in the description.